Hello everyone and welcome back to Sudden Wealth. I hope you guys are doing very well. If you do enjoy the content, please consider dropping that like and subscribe. As you guys know, it greatly helps the channel. Now, today GDP came out at 3%, substantially better than expected. The deflator or the inflation number was also 2%. The expectation was 2.2. ADP numbers came good as well. And tomorrow we have the PCE coming out, which is the quote-unquote preferred measure from the Fed. And also we had Powell's speaking. Basically, I think everyone was expecting... So first of all, the economic data, everything is actually looking quite decent. The only thing doing bad at the moment is the housing market. Obviously, with rates this high, there's nobody's going to take a mortgage. So that activity gets extremely subdued, which is a big problem. I mean, it is what it is. The Fed, this we've been talking about this for a long time. There was no rate cut expected, and there was none. The issue was a little bit the way Powell talked, which means September used to be, let's say, the consensus month for rate cuts, and now is no longer a consensus. In fact, I think the probability of no rate cut has actually just increased. Now, the funny thing about the Fed is, and Powell in particular, is that when inflation was going higher, he was adamant, this was under a different administration, one that he liked better, all of a sudden he went out of his way to try to justify that inflation was transitory. Obviously, it wasn't. And now we are witnessing an event which is, now we are in the transitory phase of not inflation due to tariffs. So in other words, we are in this transitory phase in which tariffs are in place, but somehow the inflation is not coming. But it will come. Believe me, it will come. So this is the message, right? Now, taking into account the position of the Fed with transitory stuff, I'm keen to believe that we're going to be here in 6 months and they will still be waiting for the inflation never to come. Powell will get out, and he's still waiting for the inflation to come. Now, the problem with this is different. I've seen a lot of people excited saying, oh my God, with the performance of Powell being so political, because I'll translate to you so you don't have to watch Powell's interview like I had, Powell's conference like I did. It's very simple. Blah, 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 blah. He is not the party that I wanted, and he's not the person that I wanted, so I'm not going to cut rates. Period. And I'm going to create any story why I'm not going to cut rates. I'm not going to cut rates because of tariffs. Or I'm not going to cut rates, but when the deals come, I will cut them. Or the deals are coming, or it doesn't count. We have too much employment, so I'm not going to cut rates. Employment is going a little bit down. Yeah, but inflation is 0.2% higher than the target, so we're not going to cut rates. It doesn't matter. He doesn't want to cut it. Now we start to have dissidents, which is basically the committee is starting to split, which has never happened. And the issue that I have with this is, and I've talked about this before, is not about Powell himself. Is the fact that he behaves in such a political way, and I've given this example. I'll make it very clear to you. Trump is pissed. He's pissed because with much worse data, Powell cut rates right before the election to try to prop up the market and the economies for Kamala to win. That's what he did. Now, I would be here defending Powell if he didn't cut rates at that time, because that would be consistent. Now, you could say, I don't agree with Powell, but you couldn't question that he was being consistent across his approach. But when he goes out of his way for months, looks like a complete buffoon, talking about transitory inflation, desperately trying not to raise rates against his friends, followed by cutting rates right before the election with much worse data to justify it, according to his dual mandate. And then he's not cutting right now because he could have saved face. He said, look, no, I didn't cut rates for the election. I cut rates because the data was like that over there, and now I'm cutting rates again because the data is similar, is actually better than what it was the last time I cut, so I'm being consistent. I'm cutting with two different administrations. No. What is the problem? Is that his behavior is so political that what's going to happen is Trump is going to pick someone who's going to do exactly what he wants as soon as he gets into the Fed. What is the problem with this? People celebrate this fact. People celebrate, oh my God, he's going to pick a Fed chairman or chairwoman, and he or she going to do exactly what he wants, going to cut rates by 100 basis points at a time. It's going to be great. It's going to be great. You see, this is the short-sightedness of people. You think it's great because maybe the person that you wanted as president is over there. What you're forgetting is this. What happens if 1 year someone like Ocasio-Cortez wins the election? Someone like her, doesn't have to be her, but someone with similar beliefs. Let's say they win the election. And now they pick a Fed who's even more lenient towards the administration and basically will fund any of these crazy programs of free everything and potentially lead to a complete disaster in the country. Now you see how this will turn against you very quickly. This is the problem, is people celebrate in the short term because it makes them happy. Because they don't think 5 or 6 or 10 years ahead, they think next year. Now you can make the argument, no, but if you pick someone like that, they're going to cut rates and print money like there's no tomorrow. So basically, my investments will explode and I will retire by then. And then if they actually keep on devaluing the dollar, my assets will keep on going up. So I'm going to be happy with it. And that's true until something really nasty happens in a country. And all of a sudden, somebody wants to start to find guilty people for this. Who's the one to blame? Look at this guy with so much money. It must have been him. And you're part of this guy with a lot of money. And now all of a sudden, it's also your fault. And now it starts to be not so pretty. That's the problem. You see, this game works until a certain level. And then it can really deteriorates. Look, it's a big shame. I didn't think Powell did that bad of a job, but I mean, I kind of forgave him the whole transitory stuff. Look, all the Fed people ended up, doing something they should or saying something stupid. It's part of life. Obviously, that word got very stuck in people's minds, so they really remember it. But then, when he started to play politics this aggressive, it's a big mess. It's a big shame. After hours, Meta and Microsoft came out with results, extremely good. Oh, by the way, I have to make a point out of this. I don't know what's happening to people. My feeling is they don't really understand the dynamics of the market, so they don't feel comfortable with the. I think what happened was we had a very sharp sell-off in April. And I think a lot of people sold the bottom. Potentially, may I dare risk and say it, shorted the bottom. And now they are revenge trading. So they are trying to punish the market, if this makes any sense, because the market moved without them. I heard people calling the Fed crashed the US market. Crashed the market. The S&P ended up pretty much flat. The Nasdaq went and Nasdaq 100 ended up positive. Dow Jones ended up like negative 0.4%. And the Russell ended negative like 0.47%. Even TLT ended up negative 0.5 or 0.6%. This is not a crash. I mean, this is what nowadays is a crash on social media. A crash. Flat S&P is now considered a crash. This is where we are today. Oh, the Dow Jones went down 0.4%. That's a massive crash. This is where we are. It's puzzling to me. This addiction to crashes, this obsession with collapses, this I don't understand. I mean, maybe I think they have the, how can I say this? I think they have the fantasy of shorting the market on leverage, picking the exact top, and maybe sitting in front of a fireplace and telling their grandkids, oh, we have all of this because I bet against the American economy. It wasn't easy. It wasn't like something like a poetic, I don't know. It must be some sort of fascination that it's beyond me, but it's amazing. So guys, take this to your notebooks. I think the S&P was down 0.1% or something like that. That nowadays, my friends, is considered a crash. Wow, that's kind of surprising. I wanted to talk about something very importantly. The dollar went up quite a bit. It's close to 100, the dollar index. Oil is a little bit higher, I think, on the fears of potential secondary sanctions to Russian oil. I don't think that's going to happen because the US has never done anything like that in the past. And to be honest, that's almost a declaration of war, if you want me to be perfectly honest, be perfectly transparent with you. So I seriously doubt that that's going to go like that, but you never know. So I think the market is playing a little bit the odds of it. It's not such a big deal. It's at $70. Of course, Peter Schiff is losing his panties. Maybe he forgot that earlier this year he was predicting $100 imminent, and now $70 is a big motive for celebration. But we know how these people work. We've been covering this for years now, so we are all very much aware of this little game. It's all about the engagement, it's all about the views, about the ad revenue, the sponsorships, all of that. While you lose the money, but they collect it. They don't give a crap. So they make a lot of money. I mean, Peter Schiff is a millionaire and is consistently wrong. So that makes you think, right? But what I wanted to say is something more important. I've told you this before. Someone asked me in the comments, which indicators do I use for Bitcoin, etc., etc. Look, for short-term stuff, which I look at mostly to pass the time, to make it funny, if you will, is things like your typical, 50-day moving average, your 200-day moving average, the RSI on oversold conditions, the MACD converging positively, blah, blah, blah. All of those together will give you an idea of the probability that we're going to move higher. Okay? So that's more for fun and giggles. Okay? The key is what moves Bitcoin. About 88% is liquidity, global liquidity. The other 12% is noise. Sometimes the noise is positive, sometimes the noise is negative. That's it. So if liquidity is increasing, Bitcoin moves with a lag forward. So what we're seeing today, and this is important, yields have gone up. The dollar has been rising quite a bit. So yields go up, bonds come down, dollars going up, and oil prices are also going up. So those three items are the most important, which tells me I'm expecting to see some form of contraction in the global M2 shortly. Which means that tells me that there's going to be a correction in Bitcoin not so far away from now. In fact, I think we're going to have a probably 15-20% correction around, call it early to mid-September. Okay? So that's the big one. And then I think it will continue for a final hoorah of a move. And my targets for Bitcoin have been the same since June 2023, which is when I started the channel. 242,000 to 276,000. That's my expectation. And Ethereum between 24 and 29,000. This is what I've been saying since 2023. I've never changed my targets. They've always been the same. In the beginning, I was considered a complete lunatic bullish guy. Nowadays, I'm part of the consensus trade, and I can tell you that before the cycle ends, I'm going to be the utterly stupid bearish guy. And the funny part is that my numbers never changed. That's the funny part. So that's one thing that I look at. And liquidity is, at the moment, if these things continue like this, the dollar going up, yields going up, bonds coming down, dollar going up, oil going up, those are all restrictive. Those are all tightening of financial conditions, which tells me probably within September, October, we're going to have a big correction. Now, is that going to be the end of the cycle? Traditionally, yes. But we've pushed all this liquidity and business cycle stuff forward. Particularly the Fed is making a good job in extending that. And I think that there's a very good chance that Trump and the likes will try to push the liquidity cycle as much as they can to get to the midterms, or at least that the top is not too far off from the midterms, meaning it will end the cycle in Q2 2026. Am I predicting it? No. I'm open to that possibility. The things that I've told you, global liquidity will tell you, and this is very important because people miss this, and this is going to be crucial. Bitcoin tracks global M2. During certain periods, it overshoots it in the really explosion phase of the bull market. It overshoots global M2. And during the bear market, it undershoots it. So there's going to be a time in which Bitcoin will not appear to be following the global M2, particularly on the downside is where the people will notice the most. And they'll say, oh, Powell was wrong. There's no there is a correlation. It's just for the majority of the cycle. It's just that the really final move up and the bear market move down, that's where when we depeg a little bit for a while, for a few months or so, for a couple of months, call it 2-3 months, and then we kind of track it, and then we start doing the whole same thing again. Ethereum and the altcoins are a bit different. Do they need global liquidity? Yes, all assets need it. There's no exception to this. All assets need global liquidity to move. But Ethereum needs also the business cycle to move. So it needs general people like you and me to be and to feel wealthier. The business cycle, you can see it very clearly in ISM manufacturing, which is going to come out on Friday. Above 50 is expanding, below 50 is contracting. We want to see it above 50. We've been extremely subdued on the business cycle front, which explains why altcoins have performed so poorly. Because I think we had 30 or 31 months of below 50, which, for you to have an idea, during the financial crisis, we went 18 months. We're talking about 30 or 31 now. So, and potentially this month will also be below 50, but I hope that it's like 49.8. You see what I mean? Like we're moving close to the 50, which would make it 32 months. 32 months, we're talking almost double the financial crisis. We're talking kind of record year bad performance on that front, on the business cycle front, which tells me that when it goes, it's really gonna go. That's my opinion. Maybe I'm completely wrong. We'll see. That it will really go, will really move, and people get surprised how hard and long can things like Ethereum go. That's my expectation, particularly as everybody's short Ethereum like crazy. There is still now $1.3 billion of net shorts above $4,000. So if Ethereum crosses 4,000, you're going to jump again to 4,400 or so very quickly, as I've told you, between 3 and 4,000, because there's so much short position. And still today, all the KOLs, all the influencers, they're all in Solana. All of them, no exception. Which means, I mean, now more people are coming into Ethereum and so on, but it's still disliked. But when people say, oh, I'm not going to buy Ethereum, nobody likes it. Yeah, but you're missing the point. That's why it's such a good move. That means All of these people are on this side of the table and you are here alone, or very few people. What do you think is going to happen is that there's no more people to go there. They're already there. So they can only come here. That's the only option. So that's why I always thought that it was going to outperform. And you see, and the reason why I saw, by the way, these links to PULSECHAIN as well, the PULSECHAIN ecosystem, what I call my retirement coins. A lot of influencers, including YouTubers, which are PULSECHAIN YouTubers, were really frustrated and starting to make, let's be honest, negative videos. And this is where I think, modesty aside, this is where I think my skill is, which is to simplify things. PULSECHAIN would concern me a lot if Ethereum is pumping and PULSECHAIN is not moving at all. Like, I understand that Ethereum will need to make consistent moves to convince people that Ethereum will be successful, so then PULSECHAIN can be successful. So every time that I saw a negative video by these people, I would say, is Ethereum moving up? No. Is it being a complete garbage? Yes. So why would PULSECHAIN be exploding? Keep it simple. I'm getting more enthusiastic with it because Ethereum is doing better. But when was this position made from my side? From the beginning. Good times and bad times. Thing is that the bad times, and people look at the charts every single day, they go crazy, and then they forget the basics. Is business cycle in the 55-60? No. Is global M2 contracting in a meaningful manner? Not yet. Is retail here? No. Are we seeing stupid stuff like a JPEG of a monkey sold for $10 million? But all around us? No. Are you seeing LeBron James demanding to get paid in Bitcoin? No. You see the point? We haven't seen any of it. It's just that it's been so far away. It's been so much in the past that people just forgot what it feels to be in euphoria. So that's my principle. Are we in euphoria yet? No. Is global liquidity collapsing? No. Is the business cycle peaking at 60 and starting to drop? No. So why should I be concerned? That's my position. Can Bitcoin go to 112? Yes. Can Ethereum go back to 3,300, 400? Yes. Is that a big deal? No. Will it feel like a big deal? Yes. Because people are obsessed about living the cycle. The amount of comments that I see, I just want this crap to pump so I can get out, is so massive that you're not going to have euphoria until it continues like that. What you need is to go on YouTube and see your favorite streamers and the biggest channels coming with theories of why this time we're not going to have a bear market. You need people to go on CNBC and that to be the consensus opinion. You need that the consensus price of Bitcoin is $1 million. You need that the consensus price for Ethereum to be 70K, because that's what Bitcoin did in the previous cycle, and Ethereum is a cycle behind. And maybe some conversations about the flipping. That means Ethereum flipping Bitcoin in market cap. Are we there? No. So that's why I'm not so concerned. With that, guys, thank you very much for your support. Don't forget, drop that like and subscribe. And I'll catch you in the next one.